So today, from our AX team, we have Matt Caffrey and Thomas Wynn, who will be presenting on year-end close in Dynamics AX 2012. I'm going to go ahead and turn it over to Matt Caffrey. Matt, go ahead.
All right, thanks, Andy. If we could go ahead and review the agenda for today, for this morning. Right, here's our agenda. So as Andy mentioned, I think we'll get through this in less than an hour, and we'll save some time at the end for questions. And for anyone who has done a financial close in AX before, I think you'll agree it's a pretty straightforward process. It's nothing to be too apprehensive about. But if you do have some concerns, we hope to reassure you today and give you some tools to get through the end of the year with no problems. So the agenda here is a mix of tasks and actual requirements to close the end of the year. And so we've got closing the fiscal year, reviewing your AR and AP, reconciling your subledgers to ledger, managing year-end accruals, closing fixed assets, closing inventory, project management and accounting, clearing up open journals, and then preparing a new fiscal year checklist. So with that, we'll go on to the next slide, and we'll turn it over to Thomas.
Thanks, Matt. So briefly, one of the things that AS incorporates for fiscal year end is basically a 13th period where you can actually key in your adjusting entries for year end, and I'll showcase that a little bit within AX. And we'll go over some of the settings that we actually need to go through for fiscal year end close. So I'm going to jump over to AX now. So within AX, basically, the parameters and the things for fiscal year end are all within your GL parameters, and you'll see that in the setup section. And we'll navigate down to the fast tab here for fiscal year end close. So basically, this is what defines in the system how your fiscal end activities occur and what occurs with them. So you have a couple of different options: delete close of year transactions during your transfer, create closing transactions during transfers, and these all relate to basically your year-end 13th period transactions. The year activities can actually be found under periodic, and you'll see closing sheet, opening transactions, purchase order, year-end process, and commitment close. So we'll start by looking at opening transactions. In this one right here, basically, this is where you would define your opening balance for your new fiscal year. And the parameters here basically are pretty straightforward. You have, from right here, you have your end year date from your previous fiscal year. And here is the balance account that shows what type of transfer you're doing. So here we're doing from a closing year to an opening balance, which basically we're rolling forward the balances from the previous fiscal year. This ledger account right here is basically where you would do your retained earnings. With the roll forward, you actually have the option to incorporate the financial dimensions that you utilize. So this right here comes down to personal preference, whether or not you want your opening balances dissected by your financial dimensions. Otherwise, you can actually just leave that blank. The next item we'll go through is the closing sheet. Now, the closing sheet, basically, this is how you actually get transactions and adjustments into that 13th period. Typically, most customers that utilize that 13th period are going to be using it for adjustments to retained earnings or equity adjustments. And you essentially want to keep that separate from your normal periodic transactions throughout the year. You do this by basically bringing up the General tab, and you can pull in your dates. So I'm going to go ahead and pull in from 2015 to the end of 2015. And essentially, I would post typically my transactions at the end of the year as well. As I tab forward, you'll see that the closing fiscal period is now set to period 13, and any adjustments I will bring up. Oh, I forgot to fill in my definition defining piece for my closing sheet. And with that, I can actually load my balances. Essentially, this right now basically trial balance, essentially as of the 12th period, and if I do post this, it'll post it into my 13th period, which will be my true closing period. If I choose to do any transactions or any adjustments, I would do them here as well. Like I said, for equity or retainers. That's pretty much it for your financial year-end close from a transactional standpoint. Also, just in nomenclature within AX, we don't actually ever really close period to close out the year. You typically are just going to put the period on hold. You would do that by navigating to your ledger calendar, to the calendar year of the year that you're actually working with, and here basically, in regards to the period status, you would want to actually put it on hold. We don't actually ever close anything out. The closing it out is literally in the system, not allowing any transactions to be adjusted at all or anything to actually be done to those prior periods. So typically not recommended. Moving on. The next piece we typically see customers do at the fiscal year end is they'll review either AR and open AR and open AP items, as well as provide basically guidance to the accounting team as how they want to deal with small balance write-offs. What I've seen with what I usually recommend for my customers actually within AX, you can utilize the AP and AR. AP and AR payment journals to actually look for and locate all your small balance items and write them off directly to the ledger. And we'll do that by going back to AX. And we'll start going to the accounts receivable module. And we're going to be utilizing the payment journals. Now, normally customers utilize the payment journals to actually process payments. This is just another way you can actually utilize the journal function to locate your small invoice balances and write them off directly to the ledger account. So I'm going to bring up the journal itself, create a new one. Now, as opposed to actually entering in customer payments, I'm actually just going to utilize the payment proposal of AX to find the invoices I want to write off. Here we are in the drawings, and payment proposal is towards the top. So I'm going to go ahead and create a payment proposal. These fields are pretty straightforward. You can set by due date, you can set credit limit amounts. I'm actually going to specify looking for small balances for fiscal year 2015. So I'll go ahead and expand this out to include January. Within the select parameters here, you can actually specify specific customers, or you can leave that blank. The key here is I'm actually going to look for against all customer accounts for any invoices less than $2. Go ahead and run that. So the payment proposal basically went ahead and found these invoices at the bottom here. The parameter I set in was less than 2, so you can actually specify that even more if you wanted to ignore the credit balances or just knowingly look for the debit balances. So I'm going to select this right here, which is $1.09, and I'll transfer it over to the journal. Oh, I think I clicked a little too fast. Let me go ahead and run that one more time. So by doing this, basically, it's pulling in all items that came through the proposal. I don't actually want to do anything with the credit balances. I'll leave those on accounts. with the $1.09 invoice balance here, as opposed to actually having my offset to the bank where I would normally process a customer payment, I'm going to go ahead and change that actually to ledger. And as such, you can actually write it off to whatever write-off ledger account you actually utilize. I'm not sure if you're going to post this, but this basically would be the methodology I would recommend for locating the small balances. From a customer standpoint, you can do the same thing on the AP module. The next piece we're going over is going to be reconciling your subledger to your ledger. Now, AX provides quite a few built-in reports that actually helps with the reconciliation. A lot of times customers are investigating small differences and discrepancies, and a lot of the questions again is how do you actually investigate those? So within AX, let me navigate back to the general ledger module. Under the reports section in the general ledger module, you actually have an entire basically section regarding reconciliation, and it's broken out right here by the different subledgers. So you have bank, you have customer, sales tax, specification, and vendor as well. These reports specifically compare the balances within the subledger against the general ledger. So part of year end and a month end as well, most companies are going to go through and basically reconcile it to ensure that their subledger and general ledger is intact. Running the report itself is pretty self-explanatory. You have your date field, from date to date. These two options at the bottom, normally, if you're only looking for the differences, you can actually just have the differences selected. And realistically, there should never ever be any discrepancies. But oftentimes what we find is while security settings within AX will prevent manual entries to be key to general ledger accounts, if for whatever reason someone unchecked that and manually keyed an entry to account, this is basically how you would investigate that. And as accountants, we always, you trust the system, but you always want to verify independently. So I'm going to run the report real quick for the period, just to see if there's any differences. Again, ideally there shouldn't be any. And what I'll do is I'll run the report again just so you guys actually see the details that come up. So we know as of right now, my subledger is intact. It actually is balanced. My customer subledger, that is within balance to the GL. And here you can see basically the breakdown. And we can see my subledger balance and my GL balance are definitely, in fact, balanced. Again, the same report could be run for the AP side as well. So as you can see, my fiscal year beginning was January 1, ending was December 31st. The site actually has a lot more activity, just so the ends actually you can see it. Broken down basically by the different AP accounts. But in total here you can see, again, my subledger is tied out. Now, again, speaking to the reports, you have your customer, you have your vendor. There really isn't a reconciliation report built in out of the box for inventory. However, you can actually, basically, I'm going to move over to inventory real quick. And there's a report that's built in that you can run and compare against essentially like your trial balance. Inventory value is a report that's out of the box. And this report basically has also parameters that you basically are built in, actually, sorry, not built in, but you would actually have to set up these parameters before you run the report. These are just some standard settings right here. So I'll run this report for inventory, WIP, and GL. Again, I'm just going to run it for one period, but conceptually you can run this for the entire fiscal year. Please note that depending on how you break out the report and how you're running your report, it could take a little bit more time depending on how much information you have. So we'll let this run. And conceptually, basically, you're running this report to get a value that you're expected to see within your GL, and then you would just run your trial balance to compare the two. Nothing out of the box, no out of the box report that does the comparison for you, but again, conceptually, this is what any accounting department is going to be doing when they're researching or confirming that their subledgers are actually intact. As you can see, it's taking a little bit, and this is only one period. So again, just be mindful. The more information you're actually querying from the system, the longer the report will actually take. Looks like it's just about done. So this is the breakdown of your inventory value, depending on what items and what configurations you have set up. And it'll give you the ledger details of your WIP and inventory accounts, which you can then basically validate against their trial balance. Moving on. Year-end accruals and allocations. One other function that you typically see at month-end as well as year-end is reversing journals and review of allocations within the system. Typically, most customers actually create a specific journal type just so they can track their accruals independently of the other journals. And you do that by going to the general journal, your journal names, these are all the different journals that you actually have in the system. And what we typically recommend is, or what customers prefer, is to create a new journal name, daily journal name, specifically for accruals. So like right here, we have rebate accrual journal. So with the built-in functionality in AX, from header's view here, I select my rebate accrual, and I can actually check here to have it as a reversing entry and specify here at the header level. I'll go ahead and just put in a date. And another method actually is at the line level, you can actually specify reporting, reversing entry as well. So here, the checkbox exists here for reversing as well as reversing date. Okay. Allocations in AX. AX does have built-in allocation treatment for journals and rules. And you can see them under the general ledger, setup, and posting. The first thing we'll take a look at is the accrual schemes. So this basically is an amortization of insurance scheme right here. So basically, what this is telling the system is you define your debit account, you define your credit account. You'll define basically calendar is essentially how you want to break up your entry. You can break it up by fiscal or by the fiscal calendar or your true-to-date year calendar. Period frequency. This is where you can define essentially how often you want the periods to be broken up: yearly, monthly, quarterly, and length. So right now, basically, within these settings, I can apply an amortization to an entry that will basically go through and post based on these parameters. And I'll show you how to call in these accrual schemes as well. So navigating to my journal, I'll go to journal. And let's just hit miscellaneous expense right now. Okay, putting in the description, so let's say we have insurance premiums and $100,000. Once I basically have in my base parameters and I want to start the amortization or call in the amortization schedule that I'll go up to function and go to ledger accruals. And here, the accrual identification, I'm just going to call back that insurance accrual parameter that I set up. That's pretty much it. I won't actually post this, but conceptually, just walking through how to recall those allocations. Okay. And next we're going to go into fixed assets. I'll pass it back over to Matt Caffrey.
Thanks, Thomas. All right, so now let's talk about closing fixed assets for year end. And the important thing to note here is there really is not a closing year-end process for fixed assets. So even though we're talking about closing it for the year-end, there is no special process for this. It's really just like any other month. So what we would do is we'd go ahead and process our acquisitions, disposals, depreciation, balance our accounts, and of course, since it's year-end, we just want to pay extra care in doing all of this and making sure we get everything and getting everything accounted for at the year-end. And then the important thing to note here is in running the month end or in 1231 the year-end reports is running this fixed asset balances report. It's important to note that this is a point-in-time report. So you can find that under fixed assets reports, periodic, fixed asset balances. And when you open that screen, you'll notice there's no date parameters on that. So when you're running this report and you're balancing your accounts, you're balancing your historical cost and your accumulated depreciation, it's important to get all of that right at the end of the year, because as soon as you process anything for January, the report will not be valid. So if you're in December and you've processed December, for example, you cannot come in and then run this report for September 30th. So it's really important to get this one right and just be sure once everything's balanced out, that you have that saved off in PDF, Excel, or whatever other versions you have. And then moving on to tax depreciation books. This is something that probably a lot of you don't use, and it's something in AX that you can set up to manage your tax depreciation for your fixed assets. And so the important thing to note on this is it's not linked to your value models, it's not linked to your GL, and it's also not really date specific. So this is one of the few areas that you can actually come back and run transactions for the prior year after you've closed December. So if you are using this module, you don't need to rush and try and get this one done at the end of the year. If you've gone ahead and placed the month on hold, the month of December on hold for GL, you can still go ahead and process December transactions for the tax books. So that's one important thing to know. And then moving on to inventory, we can move to the next slide. So closing inventory, this is one where there is an actual closing process. Now it's not different at the end of the year. It's not any different than during the month, but it's something you want to be sure you run at the end of the year. We actually recommend that you run this monthly. If you don't run it monthly, if maybe you're running recalcs in between and don't get this in every month, it's pretty important that you get this done at the end of the year. And what this is going to do is it's going to match up your inventory receipts and issues and then record any cost adjustments. And then it's also going to update your cost average. So another point to this is it's important to run this after accounts payable is closed. And the reason for that is because this is matching up those financial costs with the physical costs, it's important to try and get in all of those inventory transactions before this is run. So I would say at a minimum, if you don't want to wait until AP is completely closed, at least be sure you've got all of your inventory transactions in before you run this. And a couple of other important notes about this is, if for some reason you do go ahead and run it and you get some other items in and you need to run it again, this actually can be reversed, which is nice. You can actually cancel it and reverse the transaction, go ahead and process any of the other entries you had. Maybe it's some more accounts payable invoices that came in late. You can go ahead and process those and then run this again. And then another important thing to note about this is that once you run it and it's closed for the year, it will prevent any transactions from being made in that period that's closed. So for example, once December is closed, even if the GL is open, you will not be able to process any inventory transactions for the month of December. It completely closes it. So with that being said, if we could go ahead and take a quick look at the screen, and we'll just walk through the steps here. We'll go into inventory and periodic, and then closing and adjustment. And then so right up under close procedure, there's 3 options, and really these are just steps to running. You don't have to run these. But the first option would be check for open quantities. And what this will do is generate a report of all the items that will not be closed, or in AX terms, settled. So these are the transactions that after you perform the inventory close will still remain open and unsettled. In other words, there was no financial transaction to match against the physical transaction in AX. And the next option is checking the cost price. And this is something you can run just to see if you're going to have any large swings. So in this screen, it's again a report. You can set a threshold of a percentage, and if a particular inventory item is going to generate, if the close will generate a cost adjustment in excess of 50%, for example, it'll show up on this report. And then the last item is the close. And so you would simply run that. It's going to generate a report of the transactions, and then you could select that and go ahead and see the voucher that it created. All right. And so that's all we have for inventory. I'll pass it back to Thomas, project management.
Thanks, Matt. Again, in the theme of year-end items, if you deal with projects, you want to ensure that at the end of the year that you're capturing all your project costs, accrue any project revenue. If you need to close any open projects that are in progress during the year, then now would be the opportunity to do it. Let's go ahead and go back to AX. And we'll navigate over to the project management and accounting module. And here, basically, I'm just going to speak through some of the transactions you can actually do. So on this list, actually, are all the projects that we currently have in the system. And first, we'll speak to investment-type projects. So oftentimes with investments, these are projects that typically you'll have going on, and you can capitalize them into an asset towards the end of the year. Typically, you can run the estimates function here. If you needed to add in any costs that weren't already captured because the project hasn't actually closed yet, or you don't anticipate it finalizing out. One important thing to note, however, though, if you do run your estimate, it is finalized. So you want to make sure any transactions, any costs have been posted before you run your estimates. For time and materials, if you need to post additional costs, same thing. You're basically just going over to your managing tab, posting costs, or any adjustment transactions. And as you can see here, the project stage, all these projects, you can see any projects that are in process. Again, depending on your preference, towards the end of the year, it's a good time to review whether or not any projects need to be closed out or finalized. Moving on. So essentially, those are major areas where functionality is typically done towards the year end. One more thing, basically, before you start a new year, you'll probably need to cater this list to your personal business or your own business needs. These are just some items that we basically came up with for you to check. In creating a new fiscal year, you'll want to actually create the actual fiscal year within AX. Otherwise, any transactions you try and post will fail because the fiscal year won't actually exist. Update any date intervals, I'm sorry. This basically plays in multiple reports, multiple settings where the actual parameters of the date intervals actually come into play. Again, if these aren't updated, your reports, your postings can actually error out. Update any calendars in the system. Typically, if you're working with the project management and accounting, you'll have a time entry calendar versus your the next item there is your fiscal calendar. Both those items, actually, again, if those date periods aren't actually entered into the system as valid or dates for posting, you'll find yourself running into errors. If you actually have recurring journal entries that are stored, you may want to update the description if you have a static fiscal year description or whatnot for your periodic journal entry. And at fiscal year end, it's also a good time to review your dimension structure. Oftentimes, from a reporting standpoint, you may go into the fiscal year thinking you want to report on one dimension or another, and depending on how many dimensions you actually require to be posted to your ledger account, it can cause headaches for your accounting team, depending on how you expect reporting. But again, at year end, you can look back and go, hey, well, we originally wanted our trade AP dissected out by 5 different financial dimensions, but realistically, we only utilize, from an analytics standpoint, 2 of the dimensions. By changing the dimension structure for the new fiscal year, you can help improve efficiencies for your accounting department, as well as make sure the reporting you're actually getting out is relevant to your needs. The next piece, we do recommend you review control accounts. Control accounts essentially are accounts within AX where you don't want any user to be able to key manual entries. And we can actually just bring that up real quick. We have a little bit of extra time. So going to ledger, general ledger, and selecting the main account, there's an option here basically to allow or to do not allow manual entries. And as long as that option is checked, essentially, the system basically will not allow any manual entries to be posted. Creating, if you're utilizing the budget functionality within AX, again, this will tie into your budget entries. If you don't have a current budget model, you can't post your budget entries. And if you don't have a current budget, you're doing any type of comparisons from budget to actuals through management report or whatnot would also fail. Reviewing number sequences. A few of our customers do have unique number sequences set up to help them identify the transactions that are occurring. Some customers prefer static number sequences. Case in point, all journals for 2015 may begin with FY 2015. Again, just reviewing that and making sure the number sequence are still making sense for your business. And just a few housekeeping items. I spoke briefly to this earlier when we were in the project management and accounting. Any open or pending items that shouldn't carry over to the new fiscal year should actually be closed out. This includes any type of journal entries, any type of payment proposals, any type of invoices that are pending. Again, just normal, typical year-end housekeeping items. That pretty much wraps it up. If there are any questions, please feel free. I think Andy mentioned at the beginning, you can go and enter them to the comment section. You can also visit our website.